It's announcement day here in Nigeria as the CBN's Monetary Policy Committee concludes its two-day deliberations today. Now, this is a third meeting under the leadership of Olayemi Cardoso, Governor of the Central Bank of Nigeria, who says the MPC will do whatever it takes to bring inflation down. Well, the Naira is gradually regaining some lost ground as the equities market attempts a positive run this week. Hello and welcome to this special broadcast of Nigeria's MPC meeting, where the Governor of the Central Bank of Nigeria will outline the position of Nigeria's Monetary Policy Committee. Now, it promises to be a packed session as the announcement begins in just a few minutes. I'm Esther Awoni, your anchor for today. We're live from our Lagos studio. On the panel with me today, I have Kayode Akindele, MD CEO of Coronation Capital. Also joining us today is Bismarck Rewane, CEO of Financial Derivatives, and Emmanuel Odiaka, CEO of ECOB Capital. Now, the Nigerian Bureau of Statistics is expected to release a gross domestic product report for the first quarter of this year on May the 24th, while inflation continues its acceleration, rising to 33.69% in April this year. And analysts expect about a 50 to 100 basis point hike from today's meeting. And the MPC has hiked the policy rate by 600 basis points so far this year, as it targets a 21.4% inflation for the year. As the CBN governor says, the MPC will do whatever it takes to slow down inflation as the government takes on more reforms, taking on a balancing act between fiscal and monetary policies to address lingering structural challenges. The latest report also from the Debt Management Office shows that 4.5 trillion naira has been raised from the domestic market to support the federal government in financing its 2024 budget deficit. Nigeria's Debt Office further notes that out of the 7.3 trillion naira the National Assembly approved for securitization of the Ways and Means, the DMO has raised 4.9 trillion naira. Thank you so much, gentlemen, for being here today. A lot to unpack, today. But of course, as usual, let's start with your thoughts on, or rather your projections for the rate decision today. The CBN governor should be seated in about 9 minutes' time. We should begin to hear his comments. I'll start with you, Kayode. So projections I have heard so far have ranged between 25 basis points to 200. So where do you stand?
I think I'm on the higher side. I think it's going to be between 150 and 200.
Okay, 100, 150.
150 to 200.
150 to 200.
Yes.
Rationale. Why that?
I think a couple of things. I think inflation is still quite strong. We still haven't heard about the new minimum wage, which is going to come into play. I think there's been unrest about the reserves, FX reserves, especially among the FPIs. So I think to encourage them to stay, not to leave, I think there's going to be that move as well. So I think it's easier to be aggressive up front and then bring down later than to drip feed into the system. So I think that's
right. To keep signaling to the markets that we will continue to be hawkish, aggressive until we bring these rates down. By all means, Emmanuel, what is your forecast?
Yes, obviously we are still in a very contractionary monetary policy regime. And the Apex Bank governor has made mention already he was going to follow through to his own ideals on orthodox means. And one major way we have seen so far is that he will continue to project higher monetary policy rates. So being that, as a view, we think he's going to maintain a strong signal and forward signal to market to continue to hold monetary policy very firm.
But were you surprised when inflation for the month of April came out high at 33.6%?
No, not at all. I think forecasts had it even slightly higher than that. So what we have also seen month on month is that we are beginning to see some deceleration on inflationary pressures. We are not out of the hook at all right now. I think we are still going to go some 2-3 months more before we start seeing some deceleration.
We'll talk about that month-on-month deceleration. Bismarck, where do you stand?
100 basis points.
100 basis points.
Why do I say that? Because there's a slowdown in the pace of inflation. Not just month on month, even the headline inflation. So when you get that kind of trend, it means that you're approaching a point of inflection, and which means that they're taking into consideration the lags. I will not be surprised that it's doing 100 basis points, and if need be, you can always do that later on. But if you introduce a shock treatment, which actually shocks the patient to death before you even put the patient on, right? So I think that I go with 100 basis points based on the fact that there's already some deceleration in inflation, and that we are approaching a point of inflection. So.
Right. I was talking to one of our guests on Parliament today, Mr. Tilewa Adibajan. He was saying that for headline inflation, that's not going to, he doesn't expect any significant change until highest Q4 this year. But we should be, according to him, we should, or the CBN should be focusing on core inflation, should be focusing on month-on-month deceleration that we're seeing. Do you share that sentiment too?
No, I think all inflation data is historical. What is more important to economists is inflation expectations.
Okay.
If people are expecting prices to increase, then they would rush and buy more. If people are expecting the currency to depreciate, they will buy and front load their demand. So any analysis of historical inflation is actually a waste of time. It just helps you. But the thing is that, are people expecting prices to increase? And if they are expecting those prices to increase, what are they doing? Are they buying up front? I do not think that the expectations have, and I've talked to a number of producers and consumers. The point is that people have got to a point of price resistance already, right? And then people are switching. They are down trading, they are miniaturizing their packaging and all that. Companies are
shrinkflation,
as
we have heard in some quarters.
Let's be very clear that globally inflation is beginning to decline. The exchange rate is stabilizing, even though at a higher rate of 1,500. And therefore, it's only a question of time before you start seeing it feeding. It has shown up in Ghana, it's shown up in Kenya, and it's shown up in South Africa. So I don't think we're going to do anything extraordinary.
Oh, right. Kayode, I wanted to ask you, let's talk about liquidity in the system. We're talking earlier about the DMO saying it has raised 4.9 trillion out of the 7 trillion approved for the Ways and Means securitization. Now, whether or not, I mean, I don't want to go there because I remember the previous guest telling me that, that the National Assembly shouldn't even have done that in the first place, but we're here already and it's now being added to our debt stock. So we now know just, how much we have, including the Ways and Means in the debt. So, but talk to us the extent to which this is also fueling inflation, because some are saying, look, yes, we're seeing a drop in month on month, but we still have too much liquidity in the system. How much can you mop up?
Yeah, I think that's a big issue in terms of the CBN is trying to mop up liquidity in the system, but it just seems to be, when you look at the growth in money supply, it seems to be going. Because there was a contraction in February, and then it expanded again in March. And it just seems that they're trying to mop up the excess liquidity. There's still more liquidity in the system. And if you look at what's happening in terms of yields, in terms of bonds and treasury yields, there is still subscribing. So, but
I mean, with where rates are, can you blame the PFAs?
So it's 12 times, I think it's 5, the last bond auction was about 5 times oversubscribed. So you're seeing liquidity is being constricted, but there's still quite a lot of liquidity in the system. And that's why I think CBN has been very careful about what they're trying to do, because in essence, there's still that liquidity. And the biggest issue, I think, in terms of liquidity is FAC. Every time FAC enters the system, you see a move in the exchange rates, and you see a move in the liquidity. And until that is properly addressed, I think you're going to still see those kind of issues.
It's hard to imagine how that is even going to stop, because, I mean, it's a monthly disbursement to the 3 tiers of government, and...
It's a monthly disbursement, but, I mean, it's affected by the exchange rate. So when Naira depreciates, you have a bigger FAC allocation going out. And I think you now see that pump into liquidity into the system, and that money has to go somewhere. So you have those issues around that. And I also think... when you look at it and then you see all production numbers and various other things that should help in terms of the FX, the numbers are not there, and then you have those kind of issues.
Well, thank you, sir. I want you to hold that thought for. We have 2 minutes left before we go to the governor. Your thoughts on that, liquidity in the system, and how that is an issue for the CBN?
Yes, the liquidity it's a sticky issue for the Apex Bank, obviously, and it's part of why we have continued to see monetary policy rate increase to try to stem the liquidity in the system. And they have been consistent also in trying to mop up liquidity from bank coffers. I think the interbank markets is about 863 billion in repo as at yesterday. So it's a very big issue for the Apex Bank, but I think that's why we would continue to see monetary policy rate increase going forward.
Right. A minute and a half before the governor sits. Rewane.
No, the repo was up as high as 2.3 trillion Coming down to 860 billion is a movement in the right direction. It's not there yet. 2, 4.5 trillion being raised, according to Patunia earlier today. Good, but not enough. You need to take that system, money out of the system. Once money goes out of the system, that money is not available anymore. But the problem is that the fiscal authorities are making payments to contractors every day. And so they're not realizing the impact of this. There's so much that monetary policy can do. It has to be dealt with at fiscal levels. It has to be dealt with at the institutional reform that is required to make people accountable, right? And then the political will and belief that if you don't, you can't make omelette without breaking eggs. You have to really tighten liquidity and do not mix up growth for income and revenue. Everybody's focused on revenue.
Right.
But the thing is that growth is a function of confidence.
Right.